Hello there, this is fairbinaryoptions.com, and this is the US dollar and Canadian dollar, and what we have here is the whole move from the 1.28 level all the way to the downside here. And I would like to point out the fact that from my point of view this is a double combination that is followed by a zigzag. Normally that the zigzag ended yesterday, so we are talking about here of the following process from here to here. This is, I would say, wave A of a flat pattern to the downside. This wave A should be formed out of a double combination, and the double combination of a lower degree goes with the following structure. We have a move to the downside in here, namely wave A, B, C in the form of a flat, then an X wave, and then a contracting triangle that goes with the following structure as well. Wave A to the downside, the B wave, the C wave, the D, and the E. By the time the triangle is completed and by the time the B to D trend line here has been broken, we can assume that the double combination is completed. A double combination is a three-way structure or a corrective wave, as you can see here, and it means that it should be retraced minimum 61.8. Well, that retracement came in the other days, and yesterday we also had the oil inventories and so on and so forth, which didn't help the US dollar and Canadian dollar to the upside, but today we have the GDP. From my point of view, we should look for the B wave to be completed here, so we should see no more highs, no other highs when compared with this one in here, but we should see more declines, or the pair has potential to form now a five-way structure. So we have all the chances in the world that the first move or the first leg here to be the first wave of an impulsive move of a lower degree, so to have one, something like the second wave in here, then the third wave to come to the downside, the fourth, and the fifth, maybe even bigger, the fifth one. As on the overall picture, I'm looking for this market to be extremely bearish and to decline into making a new low. The whole pattern, it is called a flat, and in this flat it is being, let's say, expected that the lows in wave A should be broken, as it is called a flat with a weak B wave, and normally it's a flat with a B failure. Why B failure? Because of the inability, so far at least, the inability of price to retrace more than 80% in this pattern. So let's write here what's the plan for US dollar and Canadian dollar. The expiration date on the US dollar and Canadian dollar is, let's say, important. I would go with end of day expiration date today, but for the ones that are more conservative, you can go with 1 week expiration date, or even 1 month. Let's say end of day end of 1 week, sorry, expiration date for US dollar and Canadian dollar, and that means 17 GMT this Friday or next Friday, as there are a lot of binary option brokers that are offering this kind of expiration date. Thank you very much for being here, and have a great day. Bye bye.